Hey guys, good afternoon. It's Tim. Welcome. I'm happy to be back. And big thanks to Jeff for stepping in and shooting videos while I was gone, and for Phil continuing to do all the work. So let's jump in, take a review. We've now got Wednesday behind us, and really not a whole lot of new action coming from the big surprises that came out of the crop report or the acreage report on Friday, right? Um, we expect more volatility to come, but let's kind of talk through some things and see if we can't get a bias. Okay, when we looked at the balance sheet, Jeff did a nice job of working through these numbers on Friday afternoon. Let's take a deeper look into them too, so we can see some ideas of what's happening. You know, when we've been pretty bearish corn for a long time, and the reason that we've been bearish is because we believed that this number here, which is what the USDA published as the carryout, but we believed that that number could get worse. And the reason we thought that isn't because we thought that they would increase acres like they did. I don't think anybody saw that coming. And it's not necessarily that we thought that we would blow the yield out of the water. It's really that we thought that they would find more bushels because demand has been lacking, and that they would actually increase this number of beginning stocks because they found more inventory, right? And to us, that makes a lot of sense. If your demand is way slower than expected, then at some point you should assume that there's more bushels available to be bought. And so therefore we thought this number could come up and that this number would come down. Because remember, in April, from April to May, they increased demand by 600 million bushels, 680 million bushels here, right? Why did they do that? It never made any sense to us at all. And so we thought this number could really swell because this demand number could come down and this number could come up. And we really kind of thought that these numbers up here were static and weren't really going to go anywhere. So now kind of a lot has changed, and it's made this even more interesting, because now what they've done is increased the acreage. We're going to increase the harvested acres. Now we have yield in play. They shocked the market by decreasing the beginning stocks, not increasing them, and they've left the demand the same so far. So now what they can actually do is they can actually decrease the demand and not change the carryout. So if they drop yield to 175 and decrease demand by 300 million bushels to say, hey, we're slow, right? We haven't had the export pace. If they do those two things, then our carryout stays right here. So to us, what this really means is that maybe the downside is out of corn for now. Because when we were worried about the downside and corn breaking to 420 or 380 or 350, we were looking at a balance sheet somewhere north of 2.5 billion bushels, maybe closer to 3. And now we're back to saying, hey, maybe we're just at 2.2. But now, what if demand doesn't come down? Because now, stay with our logic here, right? If soybeans are at risk of going negative or having to ration and decrease demand, the way they do that is they turn soybean meal demand into corn demand. And we do that with lower corn prices and higher bean prices, right? Or one or the other. And so what that does is that actually bolsters this demand number and explains why the USDA did this, because this made no sense to us. So maybe the USDA is actually onto something from a demand standpoint. We already know we have fewer bushels than we thought, and we now know our acreage number and what our production might be. So our production could come down from what the USDA originally said it would. Demand stays the same, and therefore we have more pressure on yield. It's all a big fancy way of saying now we're back to yield and what demand is. Because if demand exceeds the USDA's threshold for whatever reason, and yield doesn't come all the way back, then all of a sudden we're back to a very, very tight carryout. And so, we need to go find higher ground in this case. So we have a lot of road to travel over the next couple of months, and a pretty wide range of balance sheets but I think the USDA maybe has already given us the top end of that balance sheet given what we know today. So we aren't looking a lot lower in corn. In fact, we're turning more neutral to slightly bullish because of what beans might do. I'm not even going to manipulate these numbers really. I'm just going to leave them the way Jeff had them. But the reality is that a 4 million acre decrease in numbers, in a 4 million acre decrease, puts incredible pressure on yield, because if we just flip from 52 to 50, we're negative beans if you leave everything else constant. And so this puts us at a very, very touchy situation in beans, and it makes it really hard to see a big break coming in the soybean market given that tightness. Something has to change in order for that to happen. Even if we blow the top out of our yield, right, and let's say we go to 54, even then we're still not seeking much lower ground like we had previously thought, because the USDA we just don't have the room to bargain or to gamble with our production. So I think beans have to ration. I think they got to go higher. And by going higher, let's look at beans first, okay? Then we're going to come back here to corn. So let's look at soybeans, and what do we mean by we have to go higher, or we think we're going higher? Let's go to a weekly chart, continuation weekly chart, and pull it back all the way back to 2012. So the all-time high in beans is right here at about $18, right? We didn't quite get there in the summer of 22. If what the USDA is telling us is true, we are way tighter now than we were back here, and we're even tighter here than we were back here. So logic would say, hey, beans could really run here and they could go to all-time new highs if it's in fact at risk that we have to go negative. Remember, the crush margin's positive, right? And all the demand is coming from the crush side. It doesn't necessarily mean that China is out, or that their exports matter that much, because they still have a lot of mouths to feed. So they can't get everything from Brazil. They have to come up here to some extent, and the more pressure these markets put on Brazil because of the Argentinian drought, and the more pressure we put on it from a soybean meal perspective, the more bullish it gets our exports, especially from a corn standpoint. So beans really could explode here. And if we zoom in here on the weekly cloud on the continuation chart, you've got a pretty clear path, right? The top of that cloud is 1567. July beans are trading 1440, 1544 today, and November is all the way down at 1350. So I think the best way to look at it is that November beans should come up and test some of these areas if we are indeed that tight. Now, we have a USDA report next week, and they're going to change the numbers. I don't know what they're going to change them to, but if they leave things as they are, then that bean carryout is going to be way too tight for comfort, and beans are going to have to do something about that. So we're bullish beans. I don't know where a perfect entry point is, because let's look at the November contract. We do have this double top right here. We did not perform well on Monday. We closed way off our high. On today, we didn't perform great, but we also didn't really do anything technically today. I don't love these bearish divergences forming here, but given the news that just came out, sometimes these indicators can get kind of skewed. So I would expect maybe a little bit more pullback, and then for these highs to be challenged, and ultimately much higher levels to come just because of that tightness. So how does that relate to corn, right? I mean, corn looks like death, right? It has to go lower. Well, it very well might, but in order for it to get much lower, I think our carryout has to get bigger. So we have to start seeing some sort of evidence that that either our yield is going to start exceeding what the market thinks it's going to do, or that our demand is in fact weaker and going to get weaker. But for the short term, I think we got to look higher in corn, and I think we've got to look back up into this daily cloud in order to work off some of this oversold condition. And in fact, if you look at the shorter term charts on corn, these are very oversold. They've diverged. They've been diverging for a couple days. I think this move is probably going to result in a little bit of a bounce and should come back up into this 530, 540 area, which puts us into a bigger picture view on corn, is that we're really range bound. I mean, hey, a 2 billion bushel carryout isn't enough to rally it to 750. A billion bushel carryout is enough to take us to all-time highs. I don't think that either that happens, and I don't think we price in the best or worst case scenarios. I think we go sideways, and I think we're going to be range bound somewhere between 540 and 560 and call it 480. So I think we're going to be range bound here for a while until beans can figure out what they need to do. And then the other dynamic that has really entered into the market is wheat, right? Wheat was up 50 some cents today, really big impulsive day up. And this market is clearly trying to find some sort of direction to run, right? It's been chapped in the sideways range now for about a year and has been really difficult for people to trade. So given the news out of Russia, which is, hey, it's unstable and our wheat supply is unstable, given that news that still exists, our harvest is relatively low and corn is or beans are really tight, which is somewhat bullish to corn as well. Those factors all lead to stronger wheat, and then wheat in and of itself leads to probably a little bit more bullish bias across the board. So I think we're going to seek higher ground. I would expect the top end of this range to be at least challenged, if not blown all the way out, and then we'll see what ends up happening. But I think we may have a shot to sell wheat at higher levels, and corn should get a nice little rally out of the top of it. And beans, who knows where they go? I mean, they really could go to all-time highs if that balance sheet starts to work negative. So I think the best place to be positioned is open with upside open on beans, upside open on corn, and upside open on wheat. For those of you in some corn positions, what we ended up doing today is exiting futures and replacing them with $5 puts. So any of the MPP bushels that we're having that were short futures, long calls, we're now long puts down at this level. So if we seek lower levels, fine. We'll keep adjusting those to keep some floor and a protection on, but otherwise we want that upside open back up. All right, that's 12 minutes. It's good to be back. A lot of moving parts. I'm not sure anybody has 100% of the 100% of the picture yet, and I really don't think anybody is going to be able to see that picture perfectly clearly yet, because there's just too many moving pieces and too much at play in order to cause the markets to behave really rationally. This didn't make any sense at all. Even with the drought that we had, it still didn't make that much sense. The rain didn't just appear here and materialize. It was always here. So I think something else is going on in the market. And that something else might have been soybeans, right? Beans got really exuberant, corn went with it, and we thought it was weather that was doing it, and it really wasn't. It was acreage, and now we're trying to figure out what to do with it from here. But I think that the real answer is we probably need to come on up higher. Last thing I'm going to show you before we go is the corn soybean spread. This spread doesn't matter as much now as it does during planting time, but it's way out of whack, right? Soybeans have just exploded relative to corn, and so the market's doing its job. Hey, you've got to transfer bean demand to corn, and this is one way to do that, right? So the natural tendency is to say, hey, which leg of this spread do you want to trade? I don't really want to sell beans because I think they could go to all-time highs, but I don't really want to sell or buy corn because it might go lower. You don't have to sell beans, buy corn. You can choose one or the other in order to trade any spread. And perhaps the most oversold one in the group is corn, and maybe the one most likely to gain a little bit of ground if beans were to consolidate. So with that, I would say we'll keep watching it, and we're going to continue to try to find some sort of direction and some strategies that will work. And the only question that really matters is what comes next. And to us, that means I think we got to seek higher ground, or at least equilibrium here for the next several days. All right, there is risk trading futures and options, and you should only do so in light of your own financial condition. We will be back with you guys either tomorrow or Friday, depending on price action. If you have questions, call us. We will talk to you later. Have a great night.